The commercials say, "What's in your wallet? What's in your portfolio?" The Morningstar software that we use is actually the program is called X-Ray. So you can actually X-ray what is in the portfolio and show them, you took all this risk and you didn't get rewarded.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional. He is Tim Stearns, CFP, founder of TJ Stearns Inc., home of the Protect and Grow written retirement blueprint. Tim, I know a lot of people are probably reasonably concerned with their retirement outlook right now amidst this talk of tariffs, turmoil in the market, turbulence, and market volatility.
Peter, you have no idea, our classroom the other day, we had two back-to-back classes, and I had over 50 people with a waiting list,
Hmm.
which I think tells you, how scared people are. And we're getting a lot of people calling us back that, maybe you didn't want to engage us and now want to engage us. We're really happy that with our returns, our clients are not freaking out. We've had a plan in place for this for quite a while. We felt like there was going to be a correction, and luckily, a lot of our clients have been, we put them back into cash and that type of thing. This volatility is pretty crazy. I've seen it, back in the early 2000s, where they'd be putting curbs on trading and that type of thing. It's been a long time since I saw the swings that we've seen that are so enormous.
Yeah, yeah. Record up days
Oh
and
yeah.
and some record down days, right? And that's points wise because if you put it in the perspective of the percentage that things are moving, much larger swings in points doesn't represent nearly the percentage that it did back in the 90s or 80s just because of how far we've come and how large the market is right now. But volatility nonetheless, and people are, I think, getting a little nervous with how is this going to play out? Is it kind of going to be a slow bleed, death by a thousand cuts and keep going in the wrong direction? Or are we nearing some kind of support level where things kind of
Right.
even out until these tariffs are all figured out? But the market is anything but predictable. And we know that there are periods where growth is achieved and obtained, and we all appreciate those times, but there are also periods where we see and have to move through this volatility. The plan is what keeps you sane and sound and stable during those periods, ladies and gentlemen. And that's why Tim Stearns, CFP, and the team from TJ Stearns Inc. offer to put together the Protect and Grow written retirement blueprint for you. And if you do not have the plan that brings all of the pieces together and in focus and really outlines and details how and when each dollar is going to be utilized for you, what its job is between now and that time, how you are achieving both protection and growth. Pick up the phone and give TJ Stearns Inc. a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim, to gather information, doing a little bit of my show prep, I am part of several kind of group chats with financial advisors where they express things, air kind of questions of different strategies and talk about kind of industry trends and tools that are available. And I really felt one recently that I'll share with you. It was an advisor. He shared a screenshot from somebody, did not disclose their name, of course, or anything.
Right.
But the statement that he shared there was amidst all of this volatility, we are going to put a hold on our meeting for further planning. And his quote was, make this make sense. And I really kind of understood that. It's like, if now is not the time to do planning, then when? Because of the market volatility, I think it is more important to kind of circle the wagons, meet with your financial team, and establish a firm plan. Don't just like wing it and move through this without some kind of plan, right?
Huh. It's funny. I talk about that all the time. I give the analogy of if I'm a builder and I came to you and I said, "Hey, I'm going to redo your kitchen. What would you want from me?" And I have the people in class answer that, and they say, "Oh, we'd want plans, we'd want costs, we would want probably some references that you've helped other people like that." and I say to you, and I say back to them, hey, I'm not going to do any of that. We'll just wing it. Would you sign up with me? And it always gets a laugh, right? And people are like, they would tell you, get the heck out of their house, right? Because you're an idiot. No one would sign up for that. Yet people are doing that with their retirement. So think about that. You would want references and a plan if you're going to redo your kitchen and it's a microcosm of your world versus your retirement. You're going to hope and pray for the rest. I don't get that at all. And help me make sense of that. I don't understand that at all.
Yeah. Well, I know, Tim, that a lot of people have assets, have accounts, have investments that are exposed to the market and are moving through this that are less than confident about what is going on, the decline in balances that they are seeing if they even open their statements. But there are alternatives available. And I want to spend some time today talking about more of these defensive strategies and conservative alternatives to taking that full risk of the market. And basically the bottom line of not having to give up on the prospect and the outlook for continued progress and growth just because we do not want to take the full risk of the market. So, Tim, is it a good time to look at assessing the investments that we have and exploring alternatives that may not be available inside of our 401k or our traditional brokerage account?
I mean, the things that we're looking at for people is to get a plan. And I know that sounds kind of, infantile, right? But I mean, basically, the bottom line is when someone comes in to see us, we're going to look at how much devastation they've seen is what we've seen lately, and then start to build from the ashes, if you will. So we're going to go through we stay tried and true to our process. We don't kind of hop around and figure out what a little piece is here and a little piece there. We're going to need to build from the ground up, and that we want to create a foundation, literally. So the plan will be the foundation, and we'll show them that there's different things that you could have done, like having, stop losses or having covered calls and having uncorrelated assets. That's the one big thing we keep running into. We have people coming in nowadays from my classes, from this radio show, who are like, I didn't realize how much risk I had. Well, you're playing all the high flyers and the quote unquote magnificent seven. What did you think was going to happen? And not to be a smart aleck, but at the end of the day, we need to show them that there's a much better way to take little wins to get back to that big win, which is being able to sleep at night and not being worried about running out of money in your retirement.
Yeah, there's a lot of concentration out there right now, Tim. And I think that has exacerbated and deepened these market losses in that so much money was concentrated in basically these 10 behemoth companies that are all relatively in the same sector of the economy, like
That's fair.
these tech companies, right? And even inside of mutual funds, which to the average investor is supposed to represent some amount of diversity within one symbol, one investment piece, right? That's the concept behind mutual funds, is that we get some diversity. But even these mutual funds are highly over concentrated in these magnificent seven, or you can expand it out to about 10 stocks that have led the way up in the rally of the S&P and the Nasdaq over the last really 5 or so years. And now they're the same stocks leading the way down. So is that over concentration in and of itself? A, is it known to people? Do people understand that? And then B, is that potentially more damaging or detrimental as the market has sort of turned tides?
Well, we use Morningstar extensively in this office. Not only is it based out of Chicago, but I think it's a great product, and we can show them the redundancy, Morningstar calls it overlap, and they usually are not aware of it. That if they have a little, they have a piece of it in their own individual, let's say, stock trading account of one of these, magnificent sevens. The big one is Nvidia, And then I'll show them that they own it in about 7 to 8 other mutual funds within their 401ks, within their Roths, their IRAs, and they start realizing that they had about 25% in these stocks, and that's why they got hurt so bad. We're a big believer in doing, ETFs and that type of thing, so that we're spreading the risk throughout. And that way, if these stocks take a dive like they did, number one, we're going to go to cash, but number two, the exposure not is not as great as having that redundancy in your portfolio.
Well, we need to understand what is in our portfolio, what's the mix, what's the makeup, and even if you don't know every detail of the holdings of the mutual funds, the exposure that you have and
Yes,
the amount of risk can be quantified. And I think that that is something that not a lot of investors know exists, that you can quantify the risk like that. You can look at these mutual funds and say, hey, here has been what it's done in previous downturns. Here's the peak to trough ratio in COVID, in 2022, in if it's been around long enough, in the Great Recession. Here's how this was exposed. Here's how this fund lost value. And the services and the technology, Tim, that you have available to you can help somebody really understand that from a high level so that they can gauge if they are comfortable with that, and then also compare and look at other alternatives. And I know that's a part of the conversation as well. If this is not what you intend or going to achieve the job of protecting and growing your money like you wish, here are other alternatives. And I know that you help educate people not only about what they have, but what is out there and available, because it is a big world of the spectrum of the investment universe, and most people have what 10 or 15 funds available to them inside their 401ks.
right. One of the things that we've said on this show, and I say it all the time in my classes, the commercials say, "What's in your wallet? What's in your portfolio?" The Morningstar software that we use is actually the program is called X-Ray, so you can actually X-ray what is in the portfolio and show them, you took all this risk and you didn't get rewarded. Now, we're not here to, beat a dead horse, as they say, right? We're going to show them the way out of the debris, if you will, and trying to get into a plan. And we'll show them different things. Interest rates are still super high. And if you're an investor, this is a great time to have an annuity that would have guaranteed income. Our clients that have these annuities are, not sweating this market blip that we're seeing, no matter how long it lasts, because their bills are being paid by the annuities that we set them up with. And that's why we did this in the plan. And they understand what the process is. And speaking of understanding, Peter, I think a great thing we should do now is offer the book, because the book really spells out what is our mantra, our strategies, and how we do that. So the first 10 callers with over $1 million, I used to do them $2 million, but I know a lot of people have been hurt out there. We want to get this book into people's hands so they can get educated. So the first 10 callers with over $1 million in investable assets, give us a call. We'll get the book into your hands, Solving the Modern Retirement Riddle. And we are literally living what I was worried about in that book. And so I want people to get knowledge. Knowledge is power, and then they'll be able to sleep better at night and get a strategy that works for them in up or down markets.
Well, again, that book, Solving the Modern Retirement Riddle, if you would like your copy, just give a call, 800-640-2256, 800-640-2256, 800-640-2256. Now, Tim, that book was written a couple years ago, but it does seem prophetic now.
Yeah.
The things that you wrote about certainly are in the midst. We are in the midst of those same kind of forces and factors and fears that you wrote about. The risks that we knew we were exposed to have sort of come home to roost here. Is it too late to do anything about it now that we are seeing this market volatility, or is it still a good time to back up, learn, read the book, Solving the Modern Retirement Riddle, learn from it, and then take steps to help put in place some of the strategies that you talk about in that book that can make our way through times like what we are currently in?
There is no better time than now to get after this, and get back to the fundamentals. I coach my sons in sports, And, when they are having problems, let's say in basketball or something like that, I would tell them, get back to the basics. Right now is the time to get back to the basics. We're not traders anymore. We are baby boomers that are looking to retire and stay retired. And that being said, this is the time to get after it. Make sure that you have a protect and grow blueprint that whether the market goes up, down, or sideways, you're going to be okay. In the event that you pass, your spouse is okay as well.
Again, if you would like a copy of that book, or even more importantly, if you would like your personalized protect and grow written retirement blueprint, taking your situation, your goals, your long-term vision and strategies, diversified approach to the investment world into context, and then personalizing that plan for you, the Protect and Grow Written Retirement Blueprint, your details, pick up the phone and give TJ Stearns and Tim Stearns, CFP, a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, I'd like to talk about a couple specific instances, opportunities for when we can take more control of our money. And to put this in context and preface it, when we are in a 401k, we are a participant in our company's plan. That is
Right.
not our plan. That is our account, our ledger line inside of the company's plan for us, what they provide to us. And
Right.
there are certain times and opportunities where we can create our own plan and take control of our dollars. In particular, if we have left a job, if we have separated service, a lot of people have these older 401ks that have been left behind.
Yep.
Generally, you do not want to leave those dollars at your old company. Generally, you do not want to roll those over into your new company's 401k. This is a strategic opportunity to take control. Additionally, I know there is another big one that maybe is less well known, and that is at age 59 and a half. But can you talk about these opportunities and what they represent?
Well, let's look at this. Many people think that when you're looking at your 401k, that the only fees that you're being charged are whatever, let's say, Vanguard has on their pages within there. What we have found is that the average for 401ks in the United States is about 2.22%. That's what they're paying to be participants in there. And again, to your point, they don't really have any guidance. They don't have any control over it. We had an airline pilot who's part of the union, and he found out that they were paying at his airline 2.90%. So they're paying a lot in fees and they're getting nothing back for it. So I would tell anyone out there that has a 401k that, they've left the company and that type of thing, at the very least, get it out of there. We can help you get it out of there, or we can help you take a look at what's in there. But at the very least, get it into something that you know what you're actually paying for. Okay. The other one that you're speaking of is the 59 and a half loophole. If you've been with a company forever, one of the loopholes that are out there that's it's most people don't know about is that you're able to move your money out of your 401k while you're still working for that company. It's called an in-service non-hardship withdrawal. And you can move your money into an IRA that you're in charge of. Now, we can help you with that. We can put stop losses on it. We could do, hedging and that type of thing like we do. But either way, you will be over into your own IRA that you're in charge of, and you know exactly what the fees are and what is being done for you to protect the dollars that you have. Why do companies allow that? Because the Department of Labor has basically made it a rule. Some companies don't do it, which I marvel at that liability that they're opening themselves up to. But you can actually take your money out, your deferral will still the same. It will stay the same. Your match, if they're doing a match, will stay the same. But now the money is over into something that you have control of.
So if somebody's like, I don't really love what's happening in my 401k, I'm losing money
Yep.
here. but I don't have any alternatives because I'm still working for the company. This is my 401k. It's the only choice I have.
Yep.
That is something that you need to revisit because that may not actually be the case. In fact, more likely than not, if you have reached or passed the age of 59 and a half, because the Department of Labor, because most companies realize and understand that their 401k plan is not necessarily the best tool for the next phase of your financial life. It's been a great tool for helping you grow and build during your working career, but around retirement time, around age 59 and a half, probably not necessarily the best tool for preservation, protection, as we are seeing, and more importantly, for actual retirement needs. That is why, Tim, we are allowed to take this opportunity for that in-service non-hardship withdrawal, the in-service distribution, and the 401k, that we are not relegated to that being our only option. So if you don't like what has been going on, if you have been wondering, well, what do I do now? I've worked, I've built up a life savings here, and I don't want to see it all wiped away or lost due to down markets or trade tariffs or whatever. Like, there are options and specific steps that you proactively can take with your money.
That's correct. And it's a very great opportunity, and don't miss it because I've been doing this with my siblings. Once they turned 59 and a half, the minute they did that, we made sure to get their money into a safer, better vehicle that they actually had control over, that, we had institutional money managers helping them with their money.
I want to give out your phone number again because I think that this is not a time or opportunity that we are told about all that much, Tim. So if
Agreed.
this is news to you, ladies and gentlemen, or if you have not taken this important step, or if you have left those older orphaned 401ks behind, and you want to make sure that you know where your money's at and what it's doing, and that it is preparing you for the next phase of your financial progress, pick up the phone, give Tim Stearns a call. And oh, by the way, we do have copies of that book, Solving the Modern Retirement Riddle, for the first 10 callers with over $1 million. But if you have concerns about your retirement savings, your nest egg, and you want to explore what options you have available, give TJ Stearns Inc. and Tim Stearns CFP a call for that personalized protect and grow written retirement blueprint. 800-640-2256, 800-640-2256, 800-640-2256. Another factor, Tim, that we need to consider here is during the midst of this change in policy and regime and these changes that we are seeing in the economy, a lot of people's timelines have shifted, whether of their own accord, sort of
Right.
like in COVID when we saw the great resignation and people decided, hey, I actually don't want to work as long, whether it be by our own choice or we're hearing about these rifts, these reductions in force, and maybe, we have an unintended unemployment or retirement looming in front of us. The moment that you know and understand that your timeline may be changing, you need to back up and assess and redesign the plan, right, Tim?
Absolutely. I mean, if your timeline is changing, give us a call. If you think your timeline is not changing at all, what we've seen is that people that come in here talk to us, I'm going to stay with this company forever, and guess what? 6 months later, they get riffed or something like that. What I'm really proud of with our Protect and Grow Blueprint plan is that it's dynamic. So if life changes, which it does by the minute, we can, change it, the numbers, move it up, move it back, what have you. But I mean, at the end of the day, you need to have a plan that's good. Life isn't static. It needs to be dynamic, just like your plan will be.
Do you ever deal with somebody who's, hey, I've got a plan, fantastic. When was that plan put together or last updated? Oh, 5, 10 years ago.
Yeah.
Uh,
It's usually a spreadsheet that only that person understands. They forgot something like Medicare or the cost of IRMA. There's a lot of things that are baked into our plan that people forget.
Social Security isn't factored in or optimized, taxes,
Inflation.
inflation, yeah,
Right.
all of these things that
Right.
are maybe unaddressed and have changed, right?
Right.
our lives change.
Right.
The world around us changes. The market by the end of our conversation will have changed, right?
Right.
Tim is like the world moves so fast these days, and
Yep.
you've got to have a plan not only in place but updated on a regular basis. And I think that is the dynamic value of that Protect and Grow written retirement blueprint is that yes, it's a blueprint. It helps you to clearly see the design of the foundation and the structure and all the pieces and accents that go into your specific situation, your goal, your vision, but it can be updated along the way. And you continue to meet with clients, review progress, talk about implementation of opportune strategies, monitor the plan. And that is the real value, I feel, of working with an experienced, qualified, competent advisor, Tim.
I like to think that as well. Our phones aren't ringing off the hook. I'm in different groups with other financial planners, and I see them. Actually, I should say money managers, and they are freaking out because their clients are freaking out because they didn't have a plan. It's very easy to see what is causing this, the cause and effect. We don't have that, thankfully. Our clients know that we have their best interests. We've built a plan that's stable. They know that they're going to be okay. And I don't think a lot of people out there in America think that they're going to be okay right now.
Yeah, it is a scary time, but having the plan helps to bring some levity to that, helps us mentally,
Right.
emotionally, psychologically. During times of high market volatility and uncertainty, many savers and investors kind of freeze up, um, kind of get paralyzed by
Right.
the fear of what happens next, and then whatever happens next happens to them. Right?
Right.
That lack of action does not constitute protecting yourself from whatever we are going through or are about to go through. And it's only after the fact you look back and say, "Wow, I wish I had taken action or put a plan together back when," right? And yeah, the quarterback Cam Newton used to say in his press conferences, hindsight is 50-50, right? Which
Yeah.
we only know today what we know today, but having the plan in place allows us to have more confidence moving through the unknown, uncertain future, Tim.
I agree with that. And, I've been in this market for 31 years. I've seen the highs and lows. So I know that I want to have something that works in the middle for people that's going to keep them, happy and just enjoying their retirement. You and I have talked about this. You have one shot at it. Why would you not want to get a plan together that's going to weather storms like we are in right now?
Well, how prepared are you for market downturns? And we've seen volatility. Could it continue? Absolutely. We do not know. And as always, Tim Stearns makes the offer on the program to help you design a plan that will work up, down, sideways in the market. It is the Protect and Grow written retirement blueprint. It is a personalized plan with long-term visions and diversified strategies to help you achieve your financial goals into the future. So specifically, if you'd like to learn how to retire optimally, if you want to learn how to maximize Social Security, pay less in taxes, address the risks that we face, pick up the phone, give a call. Not only can you get the time to sit with a certified financial planning professional and design your personalized Protect and Grow written retirement blueprint, but the first 10 callers with over $1 million get a copy of the book Solving the Modern Retirement Riddle as well. Fantastic read. So pick up the phone now, give a call, 800-640-2256. That is 800-640-2256. 800-640-2256. Tim, as always, we appreciate the time, the knowledge, the insight that you share with us, and of course, those proactive savers and investors, listeners across and throughout the Chicagoland area.
Peter, I'm happy to help people. Give us a call. A lot of people need, our expertise, and we're happy to help them.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.